Hello and welcome to today's NinjaTrader ecosystem event with Alan Fitterman of DMIC2059. My name is Tiffany and I am a platform representative at NinjaTrader. But before we start the webinar, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader demo with real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. Before I turn this mic over to Alan, it is important to understand that futures, foreign currency, and options trading contains substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with substantial risk capital should consider such trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation nor recommendation, but simply educational in nature. Thanks again for joining us today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Alan Fitterman of DMIC2059. Please take it away, Alan.
Okay, great. So thank you, Tiffany, for getting me set up. And thank you, everyone, for joining me today. Today's program is about the proprietary logic, structure, and architecture for contemporary understanding of intraday E-mini chaos, breaking the intraday code of E-mini futures. We're going to look at our proprietary HOD, high of DMIC day, and LOD, low of DMIC day indicators constructed to identify in real time when the last HOD or LOD is in play. We're going to look at time momentum and price momentum. This is part of our exclusive intraday time and price meter, and we're going to look at how it works to recognize the instant GPS position of the market. We're going to look at early recognition of trend days, non-trend days, and volatile days, and how to manage these different days. We're going to look at the keys to defensible line theory and offensive line theory. We're going to look at identifying also exclusive cross-market signals and the checks and balances performed by our proprietary time teams, which constantly monitor the market as the day progresses. This is a specialty futures study based on the S&P 500, Nasdaq, Russell 2000, and Dow. The ES, NQRTY, DJ, and the financial futures index specialties. The software has also been applied to crude oil, FDAX, the British pound, and the Swiss franc, and adds the next steps to market profile, VWAP, value area, intraday wave theory, Taylor, Mandelbrot, and combinatorics. It's for beginners, intermediate, and advanced traders in contemporary markets, and individual support programs are carefully set up to suit each person's individual experience. Let's define intraday chaos and break into code. Chaos equals dynamic systems whose apparently random states of disorder and irregularities are actually governed by underlying patterns and deterministic laws that are sensitive to initial conditions. To reach logic and structure in the futures markets, we need to recognize self-similarity, fractals, and self-organizations. Small differences in initial conditions can yield diverging outcomes for dynamic chaotic behavior, as for example in many natural systems, including heartbeat irregularities, weather, and climate systems. Intraday futures markets need a multidimensional approach. Where do fractals start and end? Where are key reversals likely? How do we recognize time momentum and price momentum as the day unfolds? Volatility in contemporary intraday markets makes it essential structure, logic, and architecture are built into each new day. Older standard measures are set aside, being a poor match for current corporate computer systems. A majority of traders are projected to lose using rejigged older measures. We replace these older standard measures with proprietary chart indicators graphically visible. These proprietary indicators are based on many years of real-time research. Let's look at the essential elements of intraday analysis. Time has been the same since the markets opened over 100 years ago. All prior research and market programming was influenced by time. Each new day, time sits on its own canvas and cannot escape. It seems logical that time's fixed canvas has essential moments in each day. By recognizing the intraday chaos pattern, we can project time momentum and price momentum. There are many possible combinations and structures in any day. For each new intraday market, whatever combination appears, an instant indicator is shown encompassing the current day's context, character, and trend or non-trend preferences. Will the market trend classic up or classic down, or be a non-trend day-do, or an extremely volatile day? Is a fast breakout rally or a fast sell-off projected? Graphic, chart lines, and panel indicators are remade every morning to fit the structure of each new day. We match the context and character of the day and follow through during the day using our exclusive time teams as checks and balances as the market progresses. At any time of the day, the GPS program informs us of where the market is and what GPS objectives are met. Chart examples below define the logic. The only inputs on the chart and panel you see are DMIC software inputs. The panel has 5 headings. The first 2 headings show the instant analytic intelligence for the day. The first heading is DMIC with key time and price lines. 3 red lines create what we call rectangle 1 on the chart. And here you see this blue rectangle, that's rectangle 1 representing the 3 lines in the panel. And these send an instant intraday indicator. On this chart, we see preferred down, meaning a break below R1 low. We're looking for a break below the R1 low at the C1 price. The 4th magenta line has an existential relationship with the R1 red lines. We want to know if the magenta line is inside or outside R1, or possibly a duplicate with R1. The second heading is ranges and measures the ranges between the key individual red code lines, each of them, and the total range. As each line is measured by time related to price over a set period, we could say we are using the universal measure of time and space. Ranges add to the multidimensional measures of the software. In this chart, the signal is a duplicate of MNIO coded lines. And here you see MNIO, here you see the duplicate, and here you see the message break past C1. Combining the DMIC preferred down signal with the ranges break C1 signal, the market objective is to sell down past C1, past the R1 low. The panel information under DMIC and ranges is the logic and structure guide for the day, the scaffold for each day around which the intraday market will move and gravitate. The panel information is graphically always reproduced on the chart. The next heading is versus island, showing the relationship of the magenta line to the rectangle 1, and we'll take a closer look at this later. The next heading is 5 minutes, which record the orange time team bars, high and low and close. The first orange time team bar over here is marked on the chart with high-low tan lines. And here you can see that tan line at the orange high and this tan line at the orange low. These are a proprietary and critical ongoing measure through the day. Finally, under DMIC up and down, the breakdown price levels are in red with support levels below, and the breakup price levels are in green with resistance levels below. Added on the left side of the chart are key prior prices. The red R1, the red Y is the prior day DMIC rectangle 1. The market has a tendency to check the prior day DMIC, or we could call that the daily matrix island combination. The black M is the key prior DMIC of the past 5 to 7 days. The green W is the prior week high and low. Yellow lines on the chart are the prior day high and low, and those are important lines, as you can see by the width of the lines. Checks and balances watch the market progress through the day, which are reflected by the proprietary orange and gray time team bar signals. It's gray, here's orange, and here's a gray down there, and we'll get into those more later. Again, the DMIC indicator in the panel is preferred down. Under ranges, we've got that duplicate break C1. The DMIC instant feedback is projecting a break C1 today. The first higher day signal over here, that first orange bar, resulted in a 4-point lower test of R1 high, but the R1 high did not give way at that duplicate. But we are not eager to buy in this setup and continue waiting for a signal to sell. The key reverse signal was printed on the chart in real time, and this is the HOD signal here, and it's clear and matches the referred down analysis and a signal we've been waiting for. The recognition of the objectives of referred down projection shows a GPS recognition of where the market stands at any time during the day, and also where it's still projected to go. So we know we're above R1 high, and we're projected to go below R1 high. Recognizing the GPS position, we can choose to pre-place orders or not, and I'll wait for confirmation. The structure and logic projected self-placement charts as A, below the R1 high duplicate, with a stop loss above the R1 high duplicate, which was a reasonable risk-reward placement. A second stop below the R1 low allows a tight stop above R1 low red line. So the move below R1, so we could put a placement of a sell stop below the high of the R1 duplicate with a defensive buy stop above that duplicate, allowing us a reasonable risk reward placement. A second sell stop could be placed below the low of R1, and this allows us a tight sell stop above that red line at the low of R1. Any break in or out of the R1 structure provides a defensible line plus an offensive opportunity. The move below R1 was projected about 3 hours earlier. And once below R1 low, the ES fell 20 points in 10 minutes. And there you see that fall off. And from the time of the orange bar sell at the HOD, the market had fallen 35 points in 15 minutes. Next, the market reached the intraday DYC magenta line, which matched the L2 or the second level sell-off in the DMIC up and down program. The manuals lay out the logic of these moves and the second level sell. The market quickly fell another 30 ES points, finding support at the yellow line, the prior day low, where we understand a bounce is likely. So what happened here? Clearly, the buyers became trapped and failed to recognize the context and structure of the outstanding sell potential. Let's move on. The next chart shows 4 key reverse signals for HOD, an HOD signal, an LOD signal, an HOD signal, and an LOD signal. The early dynamic analysis projected volatility. The point being, intraday market chaos has an internal rhythm and context which needs to be recognized. Next is an NQ chart. The panel indicator is classic up. The first green arrow shows a fast rally that closes above 2 key lines, notably the R1 high and the DYC. And this is a key rally signal, again in the manuals. This can be seen as a duplicate on the chart. It also above the sidebar M, another key indicator. The projection for today's DMIC structure is that the market will be at the DMIC high of the day within 30 to 40 minutes of the DMIC R1 opening. The next buy opportunity was when the market slid to retest support at R1 high in a classic DMIC up. We had clear defensive lines, the high of R1, plus the DYC very close by. And this became an offensive opportunity to buy on the dip with a stop below the R1 plus high plus the magenta line duplicate. The dip to the key duplicate became the last low of the day. The panel prints each day's analysis for the daily matrix combination. And as we said, today's analysis is classic up. Each combination is noted in the express manuals. For instance, real-time references, examples of matrix chart compilations stand compiled in the members enclosure if needed. DMIC chart lines show the defensive and offensive price points, and enabling the use of smaller stop loss points and aggressive positions at the key logic and structure of DMIC lines and time teams. It's best to avoid chasing the market. Better to let the market come to you using the DMIC structure, scaffold, and logic. We call this the defensible line posture, which is also an offensive line posture based on the architect of each day's market. Later in the day, the market hit the orange bar, which gave an HOD signal. In other words, higher day reversed down. This signal was effective. This was both a defensive signal to protect any buy gains now and a sell signal. The next chart is my favorite setup. It's a classic down indicator in the panel, meaning we are looking for sell opportunities. The classic down indicator is joined by the ranges signals, neutral Bremar, 1 to 3 waves inside R1, projecting an early rally attempt. The first HOD signal reversed down, and there it is, coalesces with the high of rectangle 1. The manuals and compilations identify this setup, and this is an excellent sell position to take at the high of R1 when we have a classic down noted at the very high of R1. The chart shows 5 key sell opportunities using the DMIC logic, structure, and architecture, numbered 1 through 5, 1, 2, 3, 4, and 5. The chart shows sell projections at defensible lines matching the classic down indicator. The Russell 2000 RTY fell in total about 60 points on this day. The architecture presents the options to scalp and or take longer runs once identifying the key setups. This chart shows how we can cross-check the market on any day with the software. On this chart, all 3 charts are printing an HOD signal at the same time, ESNQRTY, while all charts move individually according to their structures. When all 3 signal 3 HOD higher day reverse signals at the same time, it is safest not to ignore this signal. Best choices are to protect any buy gains by moving your stop loss upwards and or enter a sell order with a tight stop. Sure, sorry, I'm trying to see where we are now. Okay, on this EN chart, I'm sorry, I've lost my chart. Sorry, guys. This I usually. Okay, I can see where I am over here. Okay, on the CS chart, the market rallied all day, but the program gives a key sell signal at the end of the day. This is a proprietary instant chart signal showing 2 consecutive HOD sell signals. Market probability has now moved into reverse mode at the gray time team bar with a checks and balances signal. The signal projects sell plus to protect any buy positions now, and it's safest not to add buys. The ES fell 20 points in 20 minutes at this time from that special signal. The Nasdaq Classic up here meets time and price projections. I'll try and go to the Nasdaq Classic up meets time and price projections and measured upward steps. The first high of the day is again projected to be 30 to 40 minutes after the DMIC opens, and a close above the orange bar high, a proprietary indicator. Remember, we said we have these tan lines at the high and low of the orange bar, projects a rally continuation. The rally meets the time and price momentum indicator when the market retests the orange team high price. So the joining of this retest of the orange team high price with a time momentum indicator projected a rally, and the Express manual and matrix compilation files provides fast feedback if needed. The rally continuation signals were also projected at the close above the magenta line and again above the R2, the rectangle high. R2 is an ongoing check and balance input measure for the PM market. From the R1 high, the Nasdaq rallied in recognizable steps about 150 points. Certain breaks of structural lines or duplicates add momentum to market movement when both time and price coalesce. And this is what we refer to as time and price analysis in real time. On this chart under ranges and neutral, the signal is projecting 1 to 3 waves inside R1. The first move reversed from the R1 high and fell to the R1 low. This was an interesting movement because that was a 17-point fall from the DMIC open. And there are confirming signals from this reversal from R1 high. The sidebar M, the key R1 week high and low, is in play, as is W, the high of the prior week. We include FOMC report day high and lows as a key ongoing measure of the intraday market. The market quickly fell below the DYC plus the FOMC lines and tested the low of R1, a fast 17-point fall. The next sell-off matched the time and price program of this particular setup. This was a break of R1 low, where we had R1 low, the magenta line, and the yellow line, the prior day low, in close proximity within a few points of each other, forming new duplicate. And this highlights again the defensive line where we can take a stop just above those duplicates, and an offensive line where we could sell on below the R1 low. These duplicate lines within 2 points forming a strong defensive line presenting that offensive opportunity. There was another separate and standalone proprietary indicator at this day. You see the 2KLB signal. The market has engulfed yesterday's low plus R1 low in one 5-minute bar low close. We are aware of this signal anytime and all day. And when it matches the context and logic, it adds to the logic of a structural sell-off. Again, we recognize the strong defensive line positions as an integral part of the software. The market fell about 13 points in 15 minutes from these sell indicators. You can scalp or stay with the run. This Nasdaq chart shows the VWAP, volume weighted average price, dotted red line, and the VWAP ends the day at the R1 low, the key price of the day, recognized 6 hours earlier when the DMIC opened. Here, the ES chart shows the market VWAP. Above, the ES chart shows the market above the VWAP. DMIC analytics showed a preferred down indicator. Yes, we saw this chart before. And the upside market seems to be attractive to buyers who seem trapped as the HO indicator results in that fast major sell-off. The HOD signal was joined by our proprietary 2KLB signal, the break 2 key line signals. And this was an independent signal from the HOD. So we have signals building up that the sell-off is close. The structure, architecture and logic of the day projected where the breakdown steps would be, where we could be pre-placed in offensive and defensive line positions. Here we have what we call a C1 mid, and you see that in the DMIC call. And this was just last month in March 2022 in volatile markets where we checked that the efficacy of the software continued. The DMIC signal is the C1 mid, meaning the C1 is between the other two red code lines. Using the ranges for the indicator, under ranges, the indicator is for 1 to 3 lines inside the R1. These indicators project a different structure reference to the day. The indicator by the software printed on the chart is a C1 mid equals extra power. And this is an early reminder, very early in the day, that the C1 line is key today. A key visible fact in the chart structure is the GPS position in the market. A test from the R1 high to low is not yet completed. So we are looking for that test, and we are looking for the break below C1. A pre-positioned sell below the C1 line using a stop loss above C1 presents an attractive setup. This reversal to R1 low was supported by the close below C1, plus the exclusive 2 key line break signal 2KLB, which showed a close below 2 key lines on the chart in 1 bar, signaling the preference for the downside continuation. On this day, the ES fell about 75 points from the C1 breakdown. The movement was in accordance with the efficacy of the software. In this March 2022 chart, we show another key signal on the chart. IO red line is above yesterday's low, while C1 red line is below yesterday's low. This is an instant feedback projecting a sell side preference. The preferred down panel indicator added to this preference. Once the market closes below the new orange time team bar over here, the R1 low becomes the last high of the day. So again, we recognize the last high of the day, R1 low. The market never closes above 10 high for the rest of the day. Once it closed below 10 low, the market never closes above 10 low. Once it closed above 10 low for the rest of the day, and the ES actually slid 70 points today. Let's take a very fast look at today's indicator. This is actually April 7th chart. Today, the first red arrow over here is a sell indicator when the R1 high was tested in a classic look down. So we're eager to sell at a test of the R1 high, the MN line, and a classic look down. The second red arrow is another sell indicator on a close below the magenta line, and this is also a sell momentum, a time momentum break. The first green arrow at the first wave signal is indicating a test to the upside is probable. And next we get an orange time team bar sell indicator at a retest of the R1 low. From this first sell indicator, R1 high, the ES fell about 30 points. At the bottom of the chart, the green arrow indicates the rally potential as the market tests the key duplicates at the low, the YO, yesterday's low, plus the FOMC high that we mark on the chart, plus today's panel low measure. So when today's panel low measures coalesce with prior measures on the market, we can have a little more confidence in these signals. So this was a rally signal here at the panel low today, and this offered an excellent defensible line position for an offensive movement. And today's final chart is another key indicator day. The DMIC ranges signals both classic up in DMIC and 100% above yesterday's high. These are two indicators that are key, and the preference is to avoid the sell side today. The market rallies coalescing with time momentum and rally projections for this setup. Once above the orange bar high, the ES never closes above it for the rest of the day. And in context, we rallied above the orange bar high, which became the last low of the day, and the market rallied about 30 points from the R1 high today. The DMIC software runs 24/7 through the Globex session. The earlier intraday DMIC setup remains relevant in the Globex session and remains on the chart until midnight. At the morning open, current DMIC information is reset, accounting for overnight activity. At 10:30 a.m. after the latest setup to the up-to-the-minute information, a new DMIC for the day is analyzed and reported live. This structure and logic remains relevant for the rest of the day. In summary, proprietary software produces a laser focus on the ES, NQRTY, DJ, and the financial futures index, allowing you to be on a strategically improved level with corporate computers and on a much improved level playing field. Unique software analyzes the logic, structure, and architecture of each new day, and the proprietary time teams make ongoing checks and balances through the day. Contemporary markets, volatile markets, need a clear understanding of intraday context. About 20 to 50 calculations are made prior to the intelligence feedback, and the AI software ensures these calculations are accurate. Using proprietary structure and logic, we see the instant GPS position of the market in one graphic view. DMIC provides an early instant indicator key for each new day, which covers every possible intraday structure and combination. Compilation charts for instant real-time reference for every combination key are in the members enclosure if needed. Express manuals detail all points in the program. We are here with ongoing individual mentoring and support as needed. Beginners, intermediate, and advanced traders in contemporary markets are all welcome. Please use the code NTW for 30% discounts on initial membership fee. Thank you very much. And I'm happy to take any questions right now. What time do DMIC ranges R1 and R2 plot on the charts panel during the day. The software starts up at 9:30 with current positions of the DMIC software, and at 10:30 it prints the DMIC, and that lasts for the whole of the rest of the day, because it's the structure and balance for the rest of the day. We do believe you need that first hour of analysis to understand how the market's going to set up for the rest of the day. Does it provide targets? Yeah, the HOD and LOD signals will provide you with target feedback. And of course, the framework and structure of R1 and the other key lines on the chart present this structure and places where you need to be aware of. Where there is a question mark is the DMIC panel. I prefer up or down. Why is there a question mark? It's just notifying you that nothing's 100%. We believe it's good, but in intraday trading, there is no such thing as 100%, and we have to be conversant with the context of each day. And we have to, as you move through the program, you will learn for yourselves and set for yourselves your own playbook, knowing which signals are your favorites, and you'll learn to concentrate on those signals in your own way and use the signals that best suit your trading style. How long have you been trading? This has been a 15-year study. So our trading day should start at 10:30-ish with DMIC. You can start earlier, but be more careful with the setup. But as I say, the DMIC setup begins at 10:30 a.m. because that sets the structure for the rest of the day. Looking at only 2022 chart, you used, it seems, why did the yellow price bar print not acknowledge the change in the upswing? I can't quite remember that chart, so I apologize. But we'd look at that in context. The yellow line doesn't stand alone. It stands in context with all the other signals within the program. Is there additional training for the software? As with any new information, there is some training necessary, and this is for as long as you want it, and obviously depends on your experience. We're happy to work with anyone. Beginners, intermediate, and advanced traders will all start at the point which they select to start at, obviously depending on the series. Does the membership include upgrades? Yes, all upgrades are included free of charge. Is this only for day trading? It can be used for swing trading. It depends on you. For instance, when we get if the market's moving upwards and you get a buy day, and we're suddenly waiting then for a sell day signal. So here we're moving into Taylor territory, of course. And when you get a sell day signal following a buy day, we know, well, we believe that the Taylor program is in progress in a 3 to 6 day rotation. It doesn't happen in an exact 3-day rotation in contemporary markets, which is why we look at every day individually. Is this only for day trading? I think I just answered that, I'm sorry. Can I use software for Forex pairs, commodities, or stocks, or is it just restricted indeed to futures. It's a specialty software for futures. It is being used for some forex pairs, such as the British pound and Swiss franc, which we find to work well. We also find it works well on the FDEX and crude oil. And if you're trading individual stocks, obviously, if the S&P 500 is showing a downside projection, the leading stocks in the S&P 500 will likely move in accordance with the S&P 500. So that's a choice you could make. 30% of what? What is the initial discount? There are a number of program choices, and whichever program choice you make, there's 30% off that of an initial payment choice. Ari is asking, is there a free trial? There is not a free trial, and we apologize for that. But this is all proprietary information. You'll appreciate the manuals are all proprietary, and once we give out that key information, it's obviously no longer proprietary. There is no trading room, but there is a training room, and I will at times send an intraday report of what happened in the market on that day, so you can see how the software performed. The webinar today, frankly, gave you all the information that we feel is necessary for you to make a reasonable decision. We've told you as much as possible without giving out our proprietary research at this point, obviously. You can also set up individual sessions with us to go through anything you want to go through. You can set up a 30-minute appointment, and we'll go through that individually with you. There are no money-back guarantees, but thank you for asking. I understand the question, but once we've given out our proprietary information, we're not doing this. I hope you've seen everything you need to. Obviously, after 15 years, we feel the program's proven itself, and we took a long time to put it on the market. It was only 3 years ago that we released the program, and I wasn't happy to release it until I was happy that everything we could do has been done. Kenneth asks, how do we get the software? Please go to the website and make the purchase off of the website. And again, remember to enter the code NTW for a 30% discount. Okay. I don't see any new questions right now. Thank you, Kenneth. I'm ready to wrap up.
Perfect. Well, I'm going to start off by thanking Alan again for taking the time to share with us today. If you enjoyed today's session, we hope that you'll join us for future webinars. We would like to remind you the information provided in this was of DMIC2059 and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading out from all of us at NinjaTrader ecosystem. And again, thank you so much, Alan.
Thank you, Tiffany.